Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup. This is for the trading week ending October 2nd, 2015, the first couple of days into the fourth quarter, final quarter of the year. And what a really interesting start we've had to Q4. Just as a reminder, we got earnings coming up or starting in the next week and a half or so. It promises to be a very watched earnings season, and we've got a lot of things on the plate for Q4. But before I talk about any of those, let's just take a look at the charts here. What I've got on the screen is the E-mini S&P 500 futures, and you can see today was a very interesting day. In fact, I've taken all of my most of my drawings and support and resistance levels and trend lines off the chart, and I've just left up here a Fibonacci uh, um, uh, drawing that just kind of just lays out where we are right now. You can see after that low that we hit on August 24, we had this huge bounce up, and then we made another higher high. We gave it up, and we actually took out that pivot low there and made a new pivot low here. You know, and in my vernacular, basically what that means is one of those kind of downward movements like that, right? So until we can take out this pivot high right here, which is, you know, right a little bit over 2,000, then I'm just going to assume that we're either in chop or in a downward mode, and we have a high probability of coming back and testing back down in this zone down here. That runs anywhere from about 1860 all the way down to the lows down here that were made back here at 1831. And I understand the market's had a nice move today, but you got to be careful here, because remember, we went from down here all the way up to here, and then we gave it up. We took out that low and we came all the way back down. This big sell-off that we had on August or this bar here, this bar here, and this bar here, and with the volatility pop, which was the highest in the history of the markets thus far, really spooked a lot of people, and we're not getting that traditional V bounce that we've had, you know, going back to 2013, 2014. We're getting this very choppy action, and right now this action does suggest more downward downside movement here. I think the momentum may carry us up a little bit on Monday, and then we're going to hit some key levels here. At these key levels, we got to watch very closely here. But until we can clear 2,000 and clear this out right here, and actually there's another level here that I wanted to show you that to me also I'm watching very closely. It's kind of an interim level clearly, but it's right in that area there. You can see it's at about 1992, okay? And we only broached it on that one intraday move, and it just moved up and moved back down fairly quickly. So you could discount that. I would buy that and say this area here represents a lot of resistance. And if we can take that out, then I'll start adding a little bit more on the long side. But until then, and I'm not going to go all in on long if we take out this area here. I need to see us go up here, possibly come up here and test it a few times, and then take out that pivot high and then continue higher for me to have a lot more confidence in this market, because it shook a lot of confidence that I had in the market. Although I was telling folks we had early warning signals coming up to this crash that we had in August. It wasn't really a crash, but it was a pretty good little pullback, and I was telling our members to be ready for it. We had a lot of advanced warning. The other thing that I'll point out is that we had this rising wedge here that I had talked about, and the you know, the definition of it's a bearish wedge is that the lower trend line moves faster or at a higher vector than the upper trend line. And then when it broke right here, if you do the math, it's roughly about 92 points. So the break there would be measured to the downside at about 92 points. And that puts us right down in this area right here, which is exactly just about where we went. Okay, give or take about 3 or 4 points. So the measure and objective worked out very well. Now we're getting this bounce up today. And today was very interesting because, you know, we had the worst jobs report of all time. I mean, it was very, very bad. Okay. I mean, it was really, I would say it was piss poor. If I look at the 120-minute chart, you can see what happened here. In fact, let me take it down even, let me just take it down to a 60-minute chart or 30-minute chart. Let's take it down a little bit. You can see right here, as soon as that report came out, we were topped out right here in this market action. I mean, we were kind of just, we were here, and it was our resistance point, and we really weren't climbing up above it. And then as soon as that report came out, bam, it started selling off. And we came all the way down here, and then this is a V bottom right here. I mean, we just came down and boom, we bounced up, and there was no sellers taking over right there, selling on any rally. It just kept going and going, and it did not stop until we closed at the end of the day up here. Okay, it just took off. And I see the TV talking heads trying to come up with reasons why it did that. And our members, what I try and tell everybody is at the end of the day, it doesn't really matter. I mean, we're here where we are, and you can come up with 101 reasons why it did this. And any one reason may be more right than the other or less right. I don't really care. Everything from good news is bad news and bad news is good news, meaning the futures market is forecasting with this horrible employment situation report we had Friday morning at 8:30 that the Feds are now boxed in and they can't raise rates until next year. In fact, the Fed's futures market, the Fed's fund is not predicting a raise until next year. So the markets love free candy, so boom, up we go. So that was one reason why I heard, but again, nothing's really, the dynamics of the markets were the same right here as they are right here, as they were down here. You're seeing just what a higher volatility market can do. It can move all over the place. And it makes folks holding swing positions where you're in and you want to play a trend up or down for 3 or 4 days very difficult to do, because once you get down here, if you're long and it's going up here and then it comes down here and then it just looks like it's going down and down and down for the next hour and a half, and you've got visions of everybody on TV and everybody else and what you got burned before going down even lower, you sell. Meanwhile, there are buyers that have already sold and they're just looking to pick up some of these things as it moves up. So clearly, we've got a very interesting marking setting up moving forward. If I look at the 2-hour chart here, you can see on this 2-hour chart, which is what I like to use for just kind of looking at the internals of a daily chart. You can see right in this area here, we broached it right here and we're sitting up in this area here, and that is setting up for a little bit of a divergence, which means we could get a little bit of softness in the market, maybe Sunday night or Monday morning when the market's open, but I suspect that won't last very long. We may come back down into the 1920 area, 1925 area, and then away we go again, and then we'll make another high up here. So we've got to watch this very closely. Now that's assuming there's no negative news that comes out of the Asian markets, but that's kind of where we're sitting right now on the markets as we ended the day today. Just about all of our stocks that I like, I mean, just exploded to the upside. I mean, just all of them. I mean, you couldn't have gone wrong today being long just about anything. The other thing that we saw a big drop in was volatility futures. Here is the the October volatility futures. You can see here that going back to the 29th of September, it's slowly been working its way down. I mean, we were up around 24 and we finished this week at 21. Okay. And you can see this jagged movement right here on this 2-hour chart. Vol moving up and then just giving it up and coming right back down again. We are in the volatility environment. Our term structure is still in a backwardation, which means that the closer you get in, the higher the volatility. A normal term structure for volatility futures is each month vol goes up just a little bit, but we're in an inverse environment, so that adds a little bit of drag to some of some of the volatility trades that we're doing, but we've got ourselves set up very nicely. So if you're not a member, I'd highly encourage you to come in and look, because I think we're taking advantage and leveraging some of the volatility that we have here. And you don't get these opportunities very often, and we certainly want to jump in and take advantage of them when they occur. The other thing, the bond market. The bond market finished up, even though it looks crazy, it still finished up 30 points today, or 30 ticks. What is the bond market trying to tell us? Well, guess what, friends? The bond market, and let's come into the daily chart here. The bond market is essentially saying, we don't believe the Feds. We think the Feds are not going to raise their rates anytime soon. So the bond market's lost a lot of confidence in Yellen. And you can see right here, just when bonds move higher, the interest rates and yields move lower. And that and typically when you have the Feds coming out and doing everything they can, including setting their hair on fire to say they're going to raise the rates this year, and the bond market just goes, nah, I don't believe you. I'm going up higher. That tells you the bond market just does not believe the communication guidance coming from the Feds. And the problem is not only the bond market, but a lot of other market players too. They're really ticked off at the Feds and how they're giving their guidance. And I think that's added to the volatility in the market, quite frankly. But you can see the bond market has moved up. Now, I am going to be ready to short the bond market if I get an indication that the all clear sign. And once we clear 2020 in that area and a little bit higher, and we start to hold these prior pivot highs, they become support. If we can clear them, then I believe bonds is going to be coming down, and we're going to come back down and test the 151 area and probably break that. And it's going to send the yields back up. So that would be, bearish TLT, bullish TBT. So that's what I'm going to be looking for. I think it's going to be a great trade for us. If we look at the currencies, well, again, just like the equity market, the dollar, you can see here, really had a really interesting day. If I put it on a 30-minute chart, you can see the dollar gave it all up, and then it just started getting a little bit stronger here. So, and keep in mind, one of the Fed governors came on this afternoon and said, yeah, there is still a likelihood that we can raise rates at this October meeting, which, these guys, they just need to shut up and do what they need to do, because all they do is send confusing statements out to the market. You've got some of them saying, yeah, we're going to raise rates. Others saying, no, we're not ready yet. And then others saying it's data dependent. And if you look at the data, it says now is not the time to raise the rates. So they're just like stirring a bowl of gumbo, and neither one of them want to be the first to take a bite. So I think it's a mess. But what we do in our group, we follow the price action, whether it makes sense or not, because as you guys know, especially those of you that have been trading for quite some time, sometimes price action just does not make sense. The markets are irrational. They're not rational. Sometimes they'll move. Eventually, the markets will get it right. But in the very short term, on a week-to-week basis, it can overshoot to the upside and to the downside. And we don't care about the overshoot. All we want to do is play the action. And that's what we're doing here. So today turned out to be a pretty good day for us. And if we look at the Australian dollar here, you can see the Australian dollar has been working its way up. Very volatile today, but I think it's going to work its way back up into this area right here. So that's kind of where we are on the Australian dollar. The Japanese yen, in times of global strife, the yen moves up. You could see the yen moving up dramatically on the news this morning, and then selling off again as money came rushing back into the equity markets globally. So it's really interesting. The other thing that really took off this morning was gold. Look at the gold market. I mean, this is a 30-minute chart, but we just shot way up. I mean, and we formed a little bit of a flag here, a bull flag, like that, and then boom, we're breaking here. So we're probably going to come up and challenge that area up here. Should we see some more strength? And then we'll probably come down and test some of these areas down here. And then the other one that really moved double the percentage in percentage terms than gold with silver. And a lot of you know, and look at silver here. I mean, it's just, whew, it took off. And I know with our members, I talk about it all the time. It's a daily chart of silver. Um, I've been playing silver long term, meaning out to the summer of next year. I've been selling puts underneath silver this entire time, and just sitting and selling puts, near dated puts, holding and also short or long dated puts going out to the summer of next year. It's a cheap instrument here if you trade SLV, right? You could do it also if you've got access to options in the silver market. But it's just where we're sitting right now, and I think it's going to be a longer term good trade. I think silver is going to be back up in the 20 handle area here sometime in the next couple of years. It's going to be choppy between now and then, but I think it's going to be up. And for all of you that aren't playing in silver when it was down in these low areas, you're going to miss out on it. Oil is another one. It had a really interesting day. If we come back into the 30-minute chart here, oil reacted pretty much the same way everybody else did. It fell to the downside, and then a Baker Hughes rig count announcement came out right about that time there, and then boom, you can see oil took off. Rig count down, inventories up, but eventually inventories will drop because the rig count is down. Be careful, guys, with oil. If we come back into the daily chart, there's going to be more oil coming onto the market. I think we're in just this longer term, very sloppy kind of trade right here like that. The odds favor a break to the upside. I don't give us much further than this area right here. Clearly the 53.60 area. That's about where I see this thing coming to a halt if we make it up that area. I'm not sure if we're going to make it up to that far. And then I could see us coming back down into the low 40s. There's just too much inventory out there. And even though you see these rig counts going down, keep in mind the technology is such that they can get more oil on a per rig basis out now than they could before, and they can get these rigs going a lot faster, especially in the fracking rigs. So that's kind of changed the dynamics. I think the entire dynamics of the oil market is changing. For our members, I'll spend a long session on that one where we can take advantage of it in the upcoming weeks. So that's kind of where we're sitting right now. Gasoline, same thing with gasoline. You can see here on this daily chart, it's down at a very low level. If I zoom in on this 30-minute chart here, you can see gas also moved kind of crazy too. It moved right back up into this area right here. I don't think gasoline, notice gasoline, let's come back on gasoline for a minute on the daily chart. You can see gasoline is down at its lows right down here, right? I mean, if I were to put kind of like a double test down here like that, you can see we're kind of in this guided range right here is kind of where we're sitting actually. Just slightly, but that's providing support for us. We could actually see it go down a little bit lower. In fact, my charts were saying we could come down to about $1.10 in gasoline. So I think longer term, well, not longer term. In these markets, 90 days is long term. We could have a little bit more weakness, but at some point next year, I'm going to get our members involved because this is going to be a great trade to the upside. I do believe that. Nat gas really just went blowing right down here at this low area here. I mean, we actually blew outside of this range. I mean, we just really got down here. I do believe with more oil or coal firing plants going under and they need to use nat gas, I think nat gas longer term is going to be well north of this 3 area right here. So keep in mind, every rig they shut down, they also are shutting down some of the natural gas production. I think the markets are kind of escaping some of that. So I do believe we're going to get some bullishness in nat gas. Besides, we're coming into the natural gas season right now. So selling puts under nat gas make a lot of sense to me. All right, everybody, it's been a really fun market. There's a lot of things we got to go over here. Members, I will see you Sunday night. We got some stocks, some cool things to look at. If you're not a member, I highly encourage you to come in and check us out. These kind of markets, they're a lot of fun. And if you are not making money, then I tell you, it's not a lot of fun. but we're having some fun here. So come check us out. Have a great weekend, everybody. For everybody in the New England area and on the Eastern Coast, button the hatches. You're going to get a lot of rain. Hopefully everybody will be okay in this event. Have a good one, everybody. Great weekend, and I will see you next weekend for our weekly roundup. Members, see you Sunday night. Bye, everybody.